Does anybody see what's going on right now? I can't wait to show you some things that I've been kind of keeping a very close eye on. And I'll tell you right now, I actually liquidated all my positions. Now, I could be completely off topic. I could be completely off base. Cash is a position, and that's where I'm sitting right now because that's where I feel safe going into this next week or potentially weeks to come as we're in this parabolic rise, it seems like, in all kinds of various assets. So today's episode, it is an important one. I'm going to be showing you some very interesting perspectives that I honestly don't know if anybody else is talking about, so I could be completely off base, to be quite honest. Or I could be just early to the punch and then all of a sudden then people are going to start talking about it. But one thing that I studied when I looked at intermarket analysis, and by the way, I'll get to the introduction here in a second, but one of the things that I've learned, bonds typically change directions before stocks, and then stocks usually change direction before commodities. So when bond yields peak, first at tops, stocks then go second, and the commodities last, and these rotations are typically less reliable at the bottoms of markets than they are at tops. And what I think that we're seeing here, not saying that there's going to be a stock market crash, but I do want to provide you some insight into what I'm seeing happening and taking place with the sectors. So with that said, I'm not going to waste any more of your time. I want to get right into today's episode because we got a lot to talk about. Let's do that. All right, welcome back. Now, if you're new here, my name is Michael Silva. I do these shows Monday through Friday, 5 days a week. I miss a couple here and there when I get busy. Okay, we use technical analysis and intermarket analysis to get a good idea as to where the market might be going next. This is a weekly recap episode. We're playing a little bit longer term charts here, and I'm having more of a focus on rotation and relative strength on this specific episode. Okay, so what we're looking right now is the market dashboard. So follow along, okay? And like I said, I probably will have timestamps in the description. I haven't. I don't know if I'll be doing that yet or not because of just the importance of this episode. But what I want to call out here, this is a weekly review of how these sectors performed in the S&P 500 this week. Notice the top of the rank, utilities. Why is that important? Well, if you follow me and you're a frequent watcher of my show, you know that utilities are more of a safe haven type of play. So they're typically lower beta, and you typically move into those for their yields. And when you see these rotations and you start seeing strength in utilities, that could be an early indication that there's a risk-off environment kind of setting itself up. And by risk off, what does that mean? Well, it means that there's the possibility for some turbulence in the markets to come. Now, this is only looking at a week, right? So don't just like think that, okay, the market can't go up anymore. That's not what I'm saying here, but it is something to just keep a very close eye on, to say the least. Now, this right here is the utilities over SPY, and we're looking at the rate of change. This is part of the beta rotation strategy developed by an award-winning white paper written by Michael Guyat, and I interviewed him on this channel about the lumber to gold ratio. But we're looking at the utilities over SPY, and you can see it finished up positive on the week, so 1.61% here on the 4-week rate of change. And it's been up there, it kind of tagged just below it earlier, but it did close above the zero line. And what that typically entails is that there is the possibility for increased volatility to come into the markets. Is it guaranteed? No, it's not. But you can see during previous, like this 2018 to 2019 drop, we saw that spike through zero right before the crash really took place. And same here, you saw it go back under zero, but then quickly spiked right back above. So it's been very, very accurate in producing good signals, letting people know that, okay, we might be seeing there's a possibility for increased volatility. Now, the next thing that I want to call out is I'm going to be bringing you to my stock charts dashboard, looking at some rotation graphs, because there's a couple of things that I find very interesting. Not only utilities performs well in uncertain environments, but consumer staples also perform well. So what we're going to do now is look at how they performed leading up and falling down into this 2019 drip, and then also this drippity drop. Oh my gosh, that's I didn't even plan that. That's from Empire. Shoot. Okay, from this drop. So let's just go to my dashboard. All right, so we are looking at the relative rotation graph. If you're new here, you probably are like, what is this? Well, this is a good visualization that allows us to see when the XLU, XLP, or various sectors, how they're performing against the SPY. All right, and if you, like I said, if you're new here, just stick with me because this could be very confusing. I try to make this as simple to understand with no jargon because I can't. That's another thing. I'm not going to get off a tangent right here, but sometimes when I listen to certain finance experts, they add jargon in just to it's like, what are you trying to do? Shake out your entire audience right here to show how smart you are? It's like, you don't need to use half the words that you use. I get it. You're intelligent, but break it down, because what shows real intelligence, in my personal opinion, is when you can take complex subjects and make them easy enough to understand for a 5-year-old brain like myself. Okay, I went on a tangent. Let's look at this graph. All right, so we're right here. See this blue line? You can see we're looking at 3-year time frame, 2019, 2021, right here. And what we're going to do is track what these look like moving up to this peak and then falling down, and same here, and then where we're at currently, okay? Now, this is important because why? Well, XLP and consumer and utilities, what you'll notice here, first off, they're improving right here. Let's see what happens when we move kind of to this peak. Everything seems fine right here. So check market sentiment right here, okay? Market sentiment is, we keep on moving higher. Everything's good, okay? These start rotating out. And what quickly happens, okay, what quickly takes place, bam, you see that? Bam, in 1 week's time, bam. That's when all of a sudden we start ripping to the downside. Guess what starts performing better? Just jerking from this lagging and weakening section to leading. So leading's up here in the top right corner. As we move further down on 2019, they continue to press further and further, moving from the bottom left to the top right, which means that they are the strongest performing sectors that we're looking at. I mean, if I put on XLV right now, XLV also was a performing sector, but it was also rotating out. We're only tracking XLP and XLU. Okay, so now this is important because now we start to see weakness in the market. And then once we start going to the bottom, you can see here, 2019, these all of a sudden start taking this turn and start rotating out. So when we're at the bottom, you can see they're rotating, they're weakening. And then guess what? Once we start ripping up to the upside, they're completely weakening. So you're seeing this cyclical, this rotation from going lagging, improving, leading back to weakening as we start to continue, okay? Now they're starting to strengthen again. And guess what? Remember when we got into right around mid 2019 here, they started, boom, they started moving, getting a little bit stronger. Why? But we had that pullback. Let's fast forward here, okay? Now, we're here, 2019, if you remember it, the market kept on pressing higher and higher and higher. Look at what is weakening. Look at what is lagging. I'm going to go ahead and continue to press forward. Okay, this is important right here. They're both lagging, but look at the tails and look where they're headed. Okay? By the way, this doesn't mean I would be investing in XLP or XLU here. Okay, that's not how I operate, and that's not how I work personally, but it is something to still pay attention to. Okay, up there, look at XLUs moving into improving. XLP gets closer, and look where we are right here on 2020. Okay, bam. And then what happens right when we start flipping over? Boom. Okay, very quickly, they move into this leading section as there's a lot of fear in the markets because of these down days. You can see we press forward. You can see as we move lower and lower through the market, they go more into this leading section. Why is this important? Now, as we get to the bottom, you start to see them rotate out. Why is this important? Well, because I want to know where we're at right now. That's where I'm kind of going towards. Now, notice that these were big drops, okay? The same rotation takes place on small drops, all right? Small drippity drops. All right, so we start moving up. Okay, we're rotating back out again. Why? Well, because people are putting their money into more performing areas, okay? Stuff that's not that's not low beta, that's not there to be protected. We move into these sectors when there's fear and when we're going into protection mode, all right? So, yeah, remember this kind of blow off top right here, and I think that was June. Yeah, somewhere like that. Guess what's getting kind of moving into that improving section? XLP, okay? Early sign, bam, what happens? Bam, they both shoot up into improving, heading towards leading, but then they quickly rotate out as we continue to press higher. So where are we at right now? Okay, so this is important, right? Okay, right here, we're at 2021. Okay, we're gonna go 2021. We're gonna kind of just move it. Boop. Look at how, and we're not there at the final yet. Look, it's lagging, but where is it headed? It's going to improving. And then what happens when we press forward as much as we can? Right here, we see XLP, consumer staples, start to move a little bit more into improving. Now, this is the early stages. We're still, we're improving here, and XLU is kind of stagnant, right? It's not moving. So what we're going to do is we're going to look at these specific charts just to kind of get a good idea, not from a relative standpoint, from a total standpoint, from their candlesticks, to see kind of how they are performing overall, to see if there is more strength to potentially come in. I actually have to move it a little bit more further, so I didn't quite do that. So actually, XLU upticked this week, and then also XLP you can see is improving. So is this the early stages of a rotation? Now, we're looking at a weekly time frame, and this can shift quickly, but it is something to call out where it might say, oh, interesting here. Is XLU and XLP trying to say something as we're getting this parabolic rise? Is money shifting into utilities and XLP, and is that kind of telling us something that might be taking place? I don't know. It's too early to tell, but what I find interesting right now, if I off-check those, look at XLB, and then look at XLI. These guys, they were, leading. You can see kind of the rotation, and now they're, boom, from the bottom left to the top right. So right now, where your focus should be, yes, that is from a risk standpoint where you want to keep an eye on utilities and consumer staples, but these guys right here are saying, hey, we're moving and we're grooving to the top right here of leading. So this means that there's strength here. So you can look at industrials, you can look at materials for potentially some really good opportunities in individual stocks that you can trade in this current environment, because utilities and XLP, they haven't confirmed anything. And that's the thing, we can't predict the future. What we can see is what we're giving, okay? And what we'll do here very soon is we'll look at yields too, because I started this show saying, hey, yields, they typically, right, bonds, we can typically see they lead first, and then the stock market follows through, and then commodities. So it's just overall some interesting stuff, and you're seeing materials here which hold commodities, starting to make this improving section into leading. We're starting to see yields curl themselves over, right? And then we're starting to see some signs of strength here in consumer staples, which could be a little bit of a red flag. So let's go ahead and bring back the charts. The first chart I want to look at is utilities. Now, a while back, I mentioned that now this is the weekly time frame. We're doing a weekly recap. I mentioned that there's a lot of hedge funds that I've been getting word of and hearing about talking about shorting utilities. But that was back, around this range right here, around 62 to 63. So I remember tweeting, I can't remember if it was a tweet or I'd have to look, but what I said was, if we start getting back above 64, that looked like the area based off of just, simple technical analysis, like this resistance and this resistance. If we get above 64, I have a strong feeling that hedge funds or individual shorts that people are shorting utilities, they're going to have to start to cover, because it makes sense from a technical standpoint. And this last week, we're up almost 4% in utilities. All right, now the trend from relative standpoint is down, okay? High, lower high, still below the 20-week moving average, but we are seeing strength since late February till now. So we need to be mindful of that. Now, from a relative standpoint, we're seeing strength here in March. We're seeing it from a total standpoint right here. And look at where it's kind of coming into. It's coming into prior resistance and all-time, I believe this is an all-time high. I haven't checked that, but I'm pretty sure. I don't know, actually. I'd have to check. But this previous high here in 2020, it's at $68, and we're seeing massive strength move into it. Not the greatest volume, but if we start taking 68 out and people are still shorting into this, so for example, if hedge funds or individual investors are going to start placing more short trades here, well, I think that if we have a weekly close above 68, I think that they're going to be forced to start considering liquidating those positions or covering, which can press up utilities even higher. And if we keep seeing money flow into utilities, that means it's going to be a leading sector, which tells me that people are they're rotating out of these just high performing kind of just not meme stocks, growth stocks, I guess, and they're going into safety. And then XLP, all right, from a relative standpoint, this is what I want to show you here. So XLP, this is the relative strength line right here. Notice when the market rolled down, okay, this is the XLP, when it fell down, how did it perform against the SPY? Yeah, it went down, but look at how much much better of a performance it had over the S&P 500. You saw the relative strength spike up. Now, since February, we actually saw a big increase right here, right? So that was really good. But in a very short period of time, that strength that came in immediately got wiped out. So that right there, from a relative standpoint, not looking at the other chart that we just looked at, but this kind of completely said, yeah, we're seeing some strength, not psych, just kidding. So we're going to continue to kind of monitor that. This could be potentially building out a base, but right now it is still heading lower. Although from a relative rotation graph standpoint, we are seeing it start to improve still. Now over here, you can see it's been pretty solid. We broke out of this stubborn 67 level, and we're starting to see continued strength. This one was up 1.29% for the week. Where did it finish? Consumer staples, right here, middle of the pack. So not quite as up there as utilities, but it is still worth noting. All right, so I just wanted to call this out because of the fact, yeah, we're seeing the opportunity right now looks like it's industrials and materials, okay, going into next week, but we have to proceed with caution because of the fact we're starting to see these rotations. Now let's get into the indices, and we'll get into some stock market indicators and yields and so forth, and then we'll get into the conclusion, kind of just button all of this stuff up. All right, we're going to start here with the S&P 500. I'm going to go through these quick because I did spend quite a bit of time already on this video. First off, I'm going to look at the daily time for the S&P 500. Let me shift that over a little bit. First off, I just want you to call out all the gaps. Clearly, there's, I'm not going to count these, but I would imagine anywhere around 20 gaps from this March low. Now, these may or may not get filled, but it is interesting looking at the amount of gaps in this parabolic kind of recovery, so to speak, from this pandemic when it hit. We are breaking above this resistance line, which is a strong sign for the bulls. Overall, pretty bullish context, getting a little overbought here on the RSI. It's getting pretty darn frothy, I should say. One thing I want to call out too, I only had the 50-day moving average on, and I wanted to just kind of point out a few times when this rise pretty significantly from it and how it reverts kind of back to the 50-day. So when it gets pretty extended, like 2, 3, sometimes even 400 handles off of the 50-day, you can typically get this reversion back or closer to it. So you can see right here, we ramped up, kind of came back, ramped up here when it got very extended, came back. That one wasn't as big. You can see right here when we bounce off, we've reverted. So it's something to call out. It doesn't mean that it will be pulling back into it, but it definitely is in a situation right now where there's more risk to going long than there is reward. So it does look like, we're at this kind of point where we need some sort of pullback to feel more confident going into trades. That's me specifically. Weekly time frame, I wanted to bring this up to your attention. Remember the megaphone pattern? We talked a lot about this in weeks and weeks ago when we were coming up here. Now the breakout is bullish. We even got a back test. So the resistance came back, acted as a support on this specific week right here. And then now we're seeing this really parabolic move. Now it's funny because this does look like this kind of psychology of the stock market chart. I'll bring that into the conclusion if I remember. But clearly just this very, very strong parabolic rise, 1.37% up for the week. Now, what I want to call out here is I'm looking at the VXX. You can look at the VIX too. I brought up the VXX because it's more tightly coiled patterns here. Megaphone pattern, this to me is interesting. So first off, one thing to consider is where we're trading for the week. We're above the upper Bollinger Band, pretty much trading completely out of it. So that is one thing. It's very extended. Typically when we get big extensions, you could get reversions back. All right. Second is obviously these little rising wedge patterns, and these rising wedge patterns came into points where the RSI was moving into that overbought reading. So right here it was tapping into it. The rising wedge broke right here, was getting extended for quite some time over it. Bam, it broke. Now we're moving back into that overbought territory. And all these wedges here, also you can pay attention to the VXX, which is a volatility measure. You can see these falling wedges, which are bullish. We broke out of them, and then it clearly went down. Here, same thing. And then right now we are coiling quite tightly as we're seeing this just really strong consolidation, or this compression, I guess you can say, here on both the VIX and the VXX. Now, this is setting itself up for just a monster correction very quickly. I would be looking at 4,000 to all the way down to 3,800 potentially, even a strong back test of this upper channel. Doesn't mean it's going to, fall all the way down to 2,200 by any means, especially not straight down. I mean, it has clearly right here. It was pretty aggressive, but there's going to be probably opportunities here in the near future to set up for long positions, would be my best guess. Probably here relatively quickly would be my guess. But however, I will say during parabolic rises, there's no saying how high they can't go. I mean, right here, just if this momentum continues a little bit, at 4,400 would probably be a very easy target if it holds, a couple more weeks like this. So that is something to keep an eye on. Now, I mentioned at the beginning of the episode about yields, how they kind of lead, or bonds kind of lead the stock market, and we'll get into that here shortly. Let's look at the Dow Jones. We're going to move a little bit quicker. Up, all-time high close again, up 1.18% for the week. Still just parabolic move above the upper Bollinger Band. All right, trading above it. So just understand the risk versus reward of going long here. One thing I want to call out is the transports. Now, the transports are interesting. They are trading right around the upper Bollinger Band, very overbought. This is important to note. We're seeing big range candles pushing up, and these last 2 to 3 candles, notice the range of the candles are getting smaller and smaller, and then this one is a complete doji candle, which means momentum is slowing. Now we're undecided whether or not we want to continue this push. So that is something very close to pay attention to. Transports make up a big portion of the just the Dow Jones composite, and when you look at Dow theory, you look at industrials and you look at transports, and they have to kind of move hand in hand here. So let's continue to monitor that. We're not quite seeing that same range slow down right here in industrials, but that could be, the transports could be telling us something here that we might be seeing in weeks to come. NASDAQ. NASDAQ's on a negative divergence. I want to just point out here too as well. A big move from the 20 period EMA on the weekly time frame. Indecision candle, small range candles, slowing of momentum after this big move. So either we're consolidating here, or the momentum slowing and trying to tell us, okay, this move is we're just kind of gassed out on this move right here. From the Q perspective, just volume, just completely falling off the board. Did close at an all-time high here too as well. Negative divergence at the at this particular moment, but that could change very quickly. Now we are breaking out, so this could be a good sign. I would have liked to see a breakout here with a lot stronger volume than this. So we'll continue to kind of monitor and just see what takes place there. And then from the daily perspective, we did break out of this previous high right here. We got that all-time high, but this right here is not the greatest looking candle. Just a little hanging man, doji hanging man candle right there. So it's consolidating. We'll see if 340 holds, or if we if we break back down. So we'll see. Russell is still within this arching pattern. This could be argued that this is a bull flag to break out. Negative divergence on the RSI, slowing momentum here on the price percent oscillator. No real direction as to, are we going to go long here? Can we go short here? As these moving averages kind of converge. Right now, I just don't see a clear trade in the Russell at this particular point in time, but we'll continue to monitor it. On the weekly time frame, you can see here it's been this big chop back and forth on the weekly time frame in this rising wedge pattern. Negative divergence there, not the greatest. When negative divergence by the mean, you're just putting in lower highs here on the relative strength index. And you can see these candles, large range candles, just chopping back and forth. Kind of makes me think that this is some sort of distribution phase. Price percent oscillator did cross over, and that's bearish as well. Let's get into a couple indicators right now. I'm going to go through these fairly quickly. Indicators, we're overbought here on the BPSPX, and it's pretty overextended reading right now. So not only are we seeing some of these kind of bearish signs as far as relative rotation goes, but we're seeing indicators that are strongly overbought too. Now, once again, parabolic rises, strong moves, they can continue for quite some time. They can be very frustrating for the bears. They can actually wipe bears out completely. So you just got to be mindful. This is not the type of market that I would be shorting into until I see, specific setups or a continued weakness, or have some sort of gauge of, what we could expect. But right now we're just completely vertical at this particular point in time, and things can stay absurd for a long time. So overbought there. Same with the BP NDX. We're back into overbought territory here, and a pretty high reading too as well, as we're pressing higher on the NASDAQ. And then this is pretty crazy. The percent of stocks above the S&P 500. I think we're taking out to, over a 11-year high right here. I didn't even go back more in history. I should, but on the daily time frame, it closed at 96.79% of the stocks are above the 200-day moving average. So very bullish, but also you got to wonder, where's the trade at? Where's the opportunity? And the opportunity to me is not where the herd is. And the herd right now says fully long. And by fully long, I mean, look at the NIAM right here and the Ridex. The Ridex extreme bullish. And then we have right here, printing 96.57. So almost max long right here, what our asset managers are doing. So, just to me, that says, hey, we're very exposed to the downside. So if things do flip on a dime, we can see just some severe selling take place, which, this was VIX crash Friday. So we saw the VIX obviously go down. Right here, you can see we had the down day on the VIX, and you can see this tight compression within this pattern here. So just be very mindful of, where we stand overall. Let's hop into the dollar too. The dollar itself is kind of floating these last 3 days around the 50-day moving average. Now, on a measured move from the bottom right here to the top right here, we're at a 50% retracement level right around just in the middle of 38 and 61. So this could be an area where traders potentially see, okay, I'm actually going to build back a long position because of the fact, we're putting in these higher lows right there. So this could be a potential opportunity to bounce. If that is the case, that could put a lot of pressure on the S&P 500 as we're moving into those overbought territories. So that to me actually makes sense to go long the dollar here. Either way you look at it, you can manage your risk really well on that type of a trade. Now, if we start seeing it move up, I would say the S&P 500 can obviously go down, and the reason why is because it has this inverse correlation. The dollar moved down here, S&P 500 broke out. If we start moving back down, I think a tag of 4,000 to 4,100, right around there, would make sense. Another thing I want to pay attention to here is the possibility, very too early to detect, but you can see here on the US dollar weekly time frame, we had the falling wedge, we broke out, and we continue this higher, and then this falling wedge is building out too. And something similar that I'm seeing here was this left shoulder head, and then this kind of dip right there, creating a right shoulder. When we crack through the neckline, it's chopped back and forth, but we did head higher. Now I can see a left shoulder here, potential head, and this could be heading lower to potentially round itself out. And in weeks to come, if it cracks above 95, it could be a violent move. Just kind of liquidating all the short positions on the dollar, forcing it significantly higher, which could put a lot of pressure on the equities market. So if that is an inverse head and shoulder, just be very careful if you're trading individual stocks, or if you have, just kind of passive portfolios, because that could put pressure. Commodities, I'm only going to show oil, just because the length of this video is getting a little too long. So my eyes are on 64. So far, we got to give bulls the benefit of the doubt, this big breakout candle. Now we're kind of trading sideways here on a daily perspective. Inverse hammer right here. So, bulls, the sheeps are following the herd, and all of a sudden the wolf shows up right here. So if that is one of these kind of just like, we move up and then we have a down leg, up, lower, low, and then we head lower back into that 50 to 54 range right here. That's a very strong possibility. So I exited my XLE position, as I already said, until I get some, a couple more days of consolidation here, or a break above 64 with some strong volume. That would kind of give me a little bit more encouragement moving back in. But right now I'm standing in mainly cash. Actually, I am just in cash positions right now until I can kind of see how the week might progress going forward. Here it is on the weekly time frame. I was hoping to get a little bit lower, so we'll see if we do. This is the same thing, right? We pulled down. Now we're seeing a strong week, still below that 64 level, and we still have other resistance above us too as well. So be mindful of that from the weekly perspective. So it's still very possible to come back here and test these lower levels. So we'll just be mindful of that, and that's kind of one of the reasons why I did exit that position with a small gain, nothing crazy. Now let's look at bonds and yields. So this is where it gets interesting. For beginning of the episode, I talked about, sometimes bonds will typically they'll move, before stocks, and then stocks will then follow, and then commodities follow after that. Now, that's really good at finding market tops, not necessarily the bottoms. And who knows to really tell if this is a topping process right here in yields. It's way too early to tell, but what does give us some insight is that it is moving into an area of resistance when we get into those charts. But you can see here, we are rounding off right here on the 10-year, rounding off here on the 30-year. So if that is the case, this could be the early indication saying, okay, stocks will follow that move. And even if we start continuing to head higher, this is still a possibility that the stock market might follow this move shortly after. And then if yields do continue to press higher, and it does find support in this area, then it might say, okay, that would give us some more confirmation that the S&P 500 or various other stocks, that track yields could be a very good play. So we just got to be mindful of that. Here's the 10-year. You can see we ran into that red zone, that area of resistance, negative divergence, weak, right? 4.79% down. But there isn't it's not like it's down significantly, right? It's not like this crazy move to the downside by any means like we saw over here. So we'll continue to track that and monitor, but this to me says, we're just putting in a lower high or a higher low, and then we might head higher. And that to me would say, okay, that means the S&P 500 and various indices can pull back here in the near future, find its support, and then continue a rampant run. So I'm, just being prepared for something like that to take place. And then we got the 30-year right here also moving into that resistance. Now we're seeing a little bit of weakness here too, down 3.42% on the week. When we look at the TLH, you can look at the TLH or the TLT, whatever. I measured a move from here to up there. We pulled down past the 50% retracement level. 61 was one that I was looking at. We bounced from that level. We tagged the 50% retracement level and headed a little bit lower. So our yield's going to start breaking back out, perhaps. But right now we're kind of just in this sideways consolidation, trying to gather, just our footing right here. All right, so that's all I got for you on this week. So let's wrap this up in a conclusion. All right, I wanted to pull up this chart on the psychology of the stock market cycle. Most people probably have already seen this. If I had to say, hey, where would you buy and where would you sell? Most people that watch my stuff would say, you want to buy around these areas down here and you want to sell when you're up here. Now, this is not a time frame based thing where we're looking and comparing it to anything right now. If we were to compare it to the broad market, right, where would we might be? Well, we're trading above the upper Bollinger Band. Right? We're at all-time highs, and we seem to make all-time highs every single day and every single week. So it's very, thrilling, to say the least. And we're getting to a point where, hey, some of these blow-off tops, they create a lot of euphoria. We don't know how high the market can press, and we don't know, when we move into periods of complacency. Now, I will say one thing about complacency: confidence breeds complacency. And when you're euphoric, well, euphoria typically makes people more confident than usual. I mean, look at right here. It says, I'm a genius. We're going to be rich. So I'm starting to just see on social media just a lot of new kind of stock traders and stuff like that, which is awesome. But it's just caution to the wind, just throwing it out there, and it's really, you can see that within the crypto space, the altcoin space, things just kind of just going completely berserk vertical. So a lot of people are making great money, but I do think that a lot of people aren't going to realize when to sell and when to take profits, and they're going to want to turn in their $100,000 into $1 million because it's a cool number and they can tell their friends that they became a millionaire. So it's like when you're at a blackjack table. You don't realize that each of these red chips are actually worth $5, right? It's just a chip. And then when you have a black chip, it's like you don't realize that it's $100. You just see the same size chip, but it's a different color. And it's the same thing when you see numbers on a screen. You don't really understand what kind of money you're really dealing with here. So when you see people, make a $50,000, $40,000, $100,000, $20,000 in a trade, a lot of the times this complacency or this kind of euphoria or this thrill wants them to take that one more bet because they can make a little bit more. And that if you notice yourself in that, just understand that there's plenty of other people doing that same exact thing. And when we reach these euphoric tops, when you see markets roll over, what typically creates that? Well, an exhaustion of buyers. And an exhaustion of buyers typically points to some sort of top, not only in markets, but individual stocks as well. It's when supply outweighs the demand. So when this euphoria dies off, they then become complacent, right? We get a pullback, oh, buy that dip. Oh, okay, now buy that dip. And then all of a sudden these kind of emotions take place. So the reason why I'm showing this is kind of just wrap my kind of head around these thoughts. We started off with relative rotation, right? And we started seeing a couple of them move in. But we started seeing strength in industrials and materials. So I personally I moved into cash position, but that's not to say that I'm going short. It's because I'm looking at very strategic opportunities in the market, and I'm going to be pressing those opportunities very, very hard. And I'm going to be doing so with protective puts most likely. And there's some advanced option strategies that I might integrate too as well. But when I see a high conviction trade, I'm going to be pressing it probably pretty hard here. Now, this was an excellent trading week, a great start to April, right? I threw a little bit at Ethereum, easy 15% gain. I watched the measured move and I got out already. Okay, it doesn't mean it can't go higher, but that's a lot of people think. They think, well, it can go high, it can go higher. Yeah, but it can also go lower, right? It can go lower, it can go do nothing. So yeah, it's just kind of my process. It doesn't mean it has to be yours. So yes, I'm in cash position. I traded XLE. I got out of my SLIJ silver miner position. That was in the green. Just overall, my Cenex position just took off on me, and I was like, okay, I'm just peeling these profits back to get a good idea, really how the market's going to play out in these coming weeks. And then I'm going to start being very, very targeted here on individual names. Now, another piece that I want to kind of conclude is we're starting to see yields roll over. That could be a forthcoming kind of thing saying, okay, stocks might follow that path here very soon. Okay, so just notice we're trading at the upper Bollinger Bands on these indices. We're pushed to all-time highs. We're getting very high overextensions. The risk of going long is much greater than the reward to the downside. So pay attention to the pullbacks. And if I had to pull up one chart and look at a pullback opportunity, let's look at the S&P 500, a pullback to, I would say 4,000. If we can get a pullback there, I think that would be an excellent opportunity. It takes a little breath and then we head higher. That's a very strong possibility. But if we start breaking it down into the lower time frames, even 4,100 to just below there, that kind of range could present itself a very good opportunity too. So by when I say I wouldn't short the market is because you can get your face ripped off during euphoric times. All right, that's all I got for you on today's episode. I hope it helps out. I hope I didn't, shake you out of, or change your convictions, but I really got to just put this out here and kind of just give you an overall view of, what's going on in my head. And that's why I do this show. All right, see you later.